Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday and welcome to another ABCD weekly roundup. How are you doing? As my son would say, we're facing 2 home days for the week.
Love it. Love it. Out of the mouths of babes. So life is good. It's a little chilly down here in North Carolina, but that's all right. Fall is officially here. You know, it's so much things to talk about. Everyone thought this was going to be Uptober. Right? That, Bitcoin and crypto are going to take off. Instead, now people are labeling it October. It's really not that bad, and we'll get into that here in a second. Quick reveal, I do have the orange on, but I'm wearing the original Genesis block sock game, the Chancellor on the brink of second bailout for banks. There are those, including myself, who would say the Fed just did the third bailout for banks here a few weeks ago when they cut rates. JP Morgan, right, is up 20% off the bottom. The other banks are up 12, 14%. And that's probably what's going on. They have massive, and I mean massive collectively, the banks have massive, massive holes in their balance sheets from all the bonds that they were forced to buy during the zero interest rate period, because no one else would buy them because you're paying zero interest rates. And then when they raised rates, they have all these unrealized losses on their balance sheet. So now they got to get, rates back down. But on the Bitcoin front, just quickly, it's interesting in that despite the fact that, everybody's freaking out that, I just want to get the stats right, that, prices are down a little bit. Since we spoke a week ago, we're dead flat. So been some volatility, but we went up and then we went down. Over the last month, we're actually up 6%. So yes, in the month of October, we're down a little bit. But the thing that I like is over the past, since February, we've talked about this, we were stuck in this distribution pattern where you're making lower lows and lower highs. And we made 5 lower highs and 4 lower lows. And finally, on September 6th, when you and I were headed over to the Middle East, actually, Sasha and I were headed over. Anyway, so I was over to the Middle East. I was so tired. I don't remember who I was with. You and I are going next week.
That's right.
But we broke out. And now we have made a higher high and a higher low. So even though it feels to people like we're in this, bear market again, I'm like, well, yeah, we're a few days into October and we're down a little bit, but there's still time. And I'm more excited about the fact that we're moving out of this distributive pattern and into more of an accumulative pattern. Now we'll see if it holds.
Yeah, and I think, it's funny one of the comments you made off the jump. When you have banking stocks resembling the growth profile of tech stocks, what does that say about our fiscal policy? It says that there's a little incentivization going on here, but I think you're right in that this kind of October or Uptober is a little bit sort of on pause, but it's not necessarily down, right? Because we've seen this week, we had some inflows coming on to the ETFs. And really, if you just kind of have equities right there at the top, right beneath that, you've got the crypto ETFs at center stage in terms of the most volume and activity that we've seen this year. So I think that that's really, illustrative of a lot of things.
Absolutely. And Bitcoin is still, year to date, the best performing asset. Outperform stocks, outperform bonds, outperform commodities, outperform everything. It's up meaningfully year to date, like 40 odd percent. And that's a big move. And yeah. Most of that happened in January and February, right post but it doesn't really matter. I mean, the fact is, if you bought it at the beginning of the year and you held it, it's up more. And that would make it, this would be 16th year. So that would make it 14 out of 16 years in its existence. It would be the best performing asset, which is pretty amazing. I don't know if you spied it, but I'm using my GM Morgan Creek cup with the Bitcoin on the back from, my good friend and fellow on-chain monkey holder at Fashion Week NYC. And, he sent me this beautiful GM cup. So GM to everybody who's watching. And, if we think about kind of what's going on in the world, the fact that Bitcoin's up the most, remember, Bitcoin doesn't change. One Bitcoin's one Bitcoin. What's happening right before our eyes, again, is our currency's getting worse. And I don't know, I mean, you got little kids, so you're probably experiencing it in spades. Every time I go to buy something, the price is meaningfully higher. I mean, meaningfully. And I've been telling the story lately of, there's this place in New York, and I wish I could remember the name of it, but it's this kind of dumpy little place in downtown, or in Midtown. And the hamburgers are famous. Now it's cash only and all this stuff. So I got an ATM outside, no credit cards. But they were $30. Now this was
for a hamburger. Wow.
And I haven't been there in a while. So they're probably more like $40 or $50 now, but this is probably 6-7 years ago when I went, $30 for a hamburger. Now, it was a fine, good hamburger, but it wasn't worth $30. But that was like New York prices, fine. And I know there's one in New York somewhere that was like $57 because it had, black truffles in it or something. But I went to a regular hamburger place, BurgerFi, in the airport. Now, granted, it's airport pricing. So it was $17 in Raleigh, Durham, North Carolina. Like, no. That hamburger didn't get better. I mean, it was a perfectly fine hamburger. The money's getting worse.
Yeah, maybe, Mark, this is why in the recent Charles Schwab survey about crypto ETFs, we said they're ranking just below the equities as kind of the top investment choices at approximately 45% of ETF investors plan to invest in crypto, with millennials leading the chart. 62% of them prefer crypto or traditional assets like bonds in international markets. And of course, this is really signaling this trend as far as being a store of value, as facilitating this medium of exchange. I mean, we were talking to a company just the other day that's kind of enabling payment rails using stable coins, which is becoming, I think when I'm starting to hear these things more and more, they don't really stand out as much because we've been seeing them for years. But I think what is notable is just how prevalent they are. And the fact that the fees that a lot of these issuers take are, a couple of bips. And really the idea here is that a small amount on a huge volume is really going to shift the way that consumers are transacting. So both as a long-term store, because we have ETFs, but then as a short-term mechanism for transacting using stable coins. And I think that's a pretty interesting trend.
Such an important point. And again, it's, I'm wearing the dark blue for Notre Dame, and I'm headed up there for the game this weekend against the hapless Stanford crowd. They were good for a little while, but something happened and they look pretty bad. Although anything can happen this season, anything. I mean, last week, 7 top 25 teams lost. Condolences. It was crazy. Tough. And you guys were just so busy looking at the beautiful view.
It was too nice
at UW Stadium. But I would say Americans are like Notre Dame football fans, right? They remember a past that never was. And we think we're the center of the universe in crypto, and it's just not true. Token 2049 in Singapore.
Right.
Reportedly. Now, I wasn't there, so I can't validate, but 20,000 people. And I was actually talking to DTAP, Dan Tapiero, who was there, and he said, I believe it because I couldn't get my app to even load to get an Uber So they're like, oh, download this local app. Yeah. So I did that. But then there weren't enough cars on that app to get, because there were so many people. So he said I had to walk through this park and it's late at night. And anyway, so 20,000 people. And I was just at this event with Filecoin Foundation in Park City this week. Amazing. I love these guys and Porterstol and the crowd. But they had a bunch of people from all over the world who came in for this event. And people were talking about how many people, again, outside are using these rails. And it's a lot of places that are sanctioned, right, by the United States. You're not allowed to do that. And so you got China, massive usage. Oh, but they banned Bitcoin. We're not talking about Bitcoin. We're talking about stable coins. We're talking about Filecoin. The biggest operators of Filecoin in the world are in China. And they're using this token to get, they have a $50,000 limit on how much you can transfer out of the country. And they're like, not with tokens, there's not a limit. That's with the dollar renminbi.
We're coming in award season for the Nobel Prizes. And so recently, I'm sure you saw this, Mark, there were a couple that got doled out. Some really, really impressive stories on the Nobel Peace Prize front with some survivors of the A-bomb. But I think on the side that it relates to AI, there was some recognitions that were made in both physics and in chemistry. So Geoffrey Hinton and John Oldfield, they received the physics prize for their pioneering work in learning and neural networks. And basically, this is also a chemistry prize that was awarded to a whole bunch of folks, David Baker, John Jumper, and Demis Hassabis. And really, this was using AI to predict protein structures, particularly through DeepMind. So this is, Mark, I feel like this one is all you. This is uniting past, present, the future with chemistry. It's AI, and it's a feel-good story, and that we're recognizing.
It is a feel-good story, except, no one wants a feel-good story to exist. So people have to throw shade on whatever happens. So, of course, there's people that don't like the Nobel Prize because it's, supposedly these deep state type people, like whatever. And look, as a chemistry and biology guy, I do love any story where we really focus on true science, like real science, not this politicized nonsense about science is what we tell you it is. No, that's actually anti-science. Science is where you form a hypothesis, you do an experiment, you gather data, you look at the data objectively, just examining the data, not with bias, examine the data, decide if the hypothesis is right, and then if it's not right, you form a new hypothesis and go through the whole scientific process again. And everything changes, right? People did believe that the earth was the center of the universe. And then it was blasphemy. Like literally people were persecuted, maybe even killed for saying that the earth was not the center of the universe, which we all know it's not. But bottom line is scientific discovery is scary, but it's so important. And so I do love the whole concept of these prizes. And, one of my favorite stories about the prize is Harry Markowitz, who I, fortunately got to study under because I'm old, at Chicago, supposedly once said that the reason he used standard deviation in the CAPM, capital asset pricing model, is that if he had used the right measure of risk, because standard deviation, the variance from a mean, why would you penalize something for positive variance from the mean? You only want to penalize the negative variance from the mean. So you should use semi-variance. And supposedly he said, well, if I do semi-variance, the math would have been too complex and I wouldn't have won the prize. And so I got to have dinner once with Dr. Markowitz, and I said, is that true? He says, damn straight. I wanted that $1 million prize. So yeah, I wasn't going to use the complex math. I'm like, oh my God, that's hilarious. So now, to this point, the shade that people are throwing on this award is that Geoffrey Hinton, I know, he's a gigabrain. I congratulate him on his award. But there are people throwing shade that's saying two things. One, that he's just wrong, that his construct of how the human brain works is just wrong. And he was partners with this guy. I always forget Carl's last name, but Carl something, which we can put in the show notes.
Yeah.
Carl something from City College in London. And Carl was the neuroscientist, and Jeffrey was the computer scientist. And so Jeffrey came to U.S., went to Google, and has become the father, literally, of AI and all the Hintonites that started all these AI companies. But they say that Carl's way of the way the brain actually works is right and Jeffrey's is wrong, that Jeffrey's is more about brute force, which is why it takes so much electricity to do one ChatGPT when our brain functions on one light bulb, the power of one light bulb, 20 watts. So anyway, the point is that that's the first shade they're throwing, that he's just wrong and he shouldn't be getting this award. I don't know. He's done some really amazing work. So that's what the award's for. But the second thing, and this is just kind of funny, in the ChatGPT age, right, of plagiarism, there are people saying that a bunch of his work is just plagiarized. Now, again, I'm not saying that. I am not saying that. I have no knowledge, but there were people like really upset about this, saying that, you know, the theories that he's getting the award for are someone else's. Now, Sir Isaac Newton said this. He says, look, I'm not that genius, right? Now, he's pretty smart, but he said, it's not me. I stand on the shoulders of giants. So every scientific award is building on the work of someone else. Now, I don't know about the publications and whether it was plagiarism. That's not my point. But it's not like any one person kind of comes up with everything. We're all building on knowledge. And look, Picasso said it best. Good artists borrow, great artists steal. So I'm not saying he stole it, not saying it's plagiarized, and I'm giving him all the props, but it was interesting to me. Although it's kind of like, back to football, it's like the Lou Holtz quote. Not that these are problems, but he says, don't tell other people your problems because 90% or 10%, no, 90% don't care and 10% are glad you have them. And
I guess he took the quote too seriously then, Mark, on neural networking. And basically that's the way that the brain structures work, right? Is that something triggers a thought in your brain, which was put in there. There's very little divine intervention. I think there's 12 people with divine intervention. They're very historically noted in several texts. So beyond that, you are reminded of certain ideas that trigger you to form the combination of what can become a new idea. Now, if you don't cite that, that's plagiarism. But I think he got a little bit, caught potentially offsides with, and then the irony is that you have kind of the first Nobel Prize in AI that has kind of some shade of plagiarism when AI itself is under the magnifying glass.
Well, and here's the thing, right? Is this one of the things where is facts,
right,
can't really be plagiarized, right? Mm-hmm. Opinions, certainly, and ideas, certainly. But like, if I use ChatGPT or Wikipedia to get facts like dates and sizes or the height and weight of somebody, mm-hmm. That's just a tool to make my writing faster. And I see no problem with that. If you're asking kids, part of the problem with our education system today, if you're asking our kids to regurgitate useless facts, why is it a problem for them to use tools that make that easier rather than harder, right? I used to have to go through the Encyclopedia Britannica, which now, if you went back and read an Encyclopedia Britannica from 1969, when I was right, you would be horrified.
Oh my God.
One, how inaccurate. Two, how biased, because it was created by a bunch of white old men. I mean, you would be horrified at the things they said were fact and true. And so science changes and facts, quote unquote, don't change, but information changes and access to information changes. And so, and then you got the whole problem of history is written by the winners. But at the end of the day, congratulations to all of the winners. And I still keep coming back to the fact that the science part of what we do for a living is the coolest thing, right? Where we are working with people who are pushing the boundaries of what's accepted and true. And let's take it back to the payment rails. Visa and MasterCard work really well. I mean, I take my little black card with me everywhere, and everyone takes it. Now, the 3% that's disappearing, I don't feel it directly. I mean, I'm paying it because they raised the price 3%. Except when you go to like a craft show or whatever, where they're like, oh, you want to use a card? Okay, it's not $10. It's, $15.
$15, yeah.
Wait a minute. Whoa, that's more than 3%. That's like way more than 3%. Like, well, that's a usage charge. And like, okay, whatever. Because I guess there's some minimum they have to hit, but.
Yikes. Well, we've got another AI story, Mark. I'm sure that you've seen this one. This was yesterday. So I think we'll break the news on this show. Some have heard. So now our old friend Elon, they want Tesla to be thought of an AI robotics company. So he's pulling the Jensen. He comes out with a leather jacket and he unveils the robotaxi. The doors fly up, and this is going to be what many people were fearing with the debut of Uber, which is this huge disruption that could potentially take away a lot of jobs while also providing some public risk to safety. But I think that this is an interesting debut, because I think we all knew it was coming. We'll see when this actually happens. But there was one part here, Mark, that I thought, beyond the theatrics, that I thought was kind of interesting. And we'll see how true this is. But this idea that people could make money on their Teslas because the owners would allow their vehicles to be listed as robotaxis. So while they're at work, they can just have their Teslas make money for them. And then it kind of begs the question of, well, why go to work at all if you just sort of have this machine that effectively is an ATM on wheels? So, Mark, I know you must have some thoughts on this.
Look, I mean, he is the P.T. Barnum of our age, right? I mean, he just is. He is the world's greatest showman. And this is as much bullshit as the Roadster launch, the Semi launch, the first time he launched the robo-taxis. He didn't actually have a physical one.
Right.
The Cybertruck. I don't know if you've actually seen a Cybertruck in the wild.
Oh, it's horrendous.
Yeah, horrendous. I mean,
it's horrendous.
And they don't even drive that well. I saw a guy trying to turn the corner, and he's up over the curb because it's a horrible vehicle. It's actually dangerous. I mean, it's up too high. It's just, and it looks so cheap and cheesy. And I don't know, maybe it's going for the Mad Max look, and that's what people want. But this is crazy. We already have the thing that he showed. It's called the black cab in London. Now, why every taxi in the world isn't a black cab in London where you have the seats that face each other and they tip up? I mean, there's no innovation here other than showmanship. Right. And this idea that your car is going to drive around and pick people up. Well, let's just do that math. If everybody's sitting someplace and sending their car out, well, who's going to get in the car? And so, look, he promised us 7 years ago, Roadsters.
Yeah.
He promised us 5 years ago, semis. We got over. He promised us, cars that were going to pay for themselves and actually appreciate. Teslas depreciate faster than any other car. Any other car. They depreciate faster. So, but the guy gets it, right? I said this a couple of months ago. The perfect earnings call now is, hello, I'm such and such CEO from XYZ company, and we love AI. And did I tell you we're integrating AI in everything we do? And AI. And did you know that we love AI? That's what you should say. And that's what he did. And even, like I said, he even took, Jensen, who puts on a black jacket.
Right. That's his thing.
Women's chests. I mean, oh my God, that was just so horrifying.
Right. And Alphabet already debuted this, Mark. So Alphabet with Waymo, they have 700 JLR, Jaguar Land Rovers in their fleet. And they're the only U.S. firm that's operating uncrewed robotaxi that collect fares. So, he was about maybe 4 years too late. Now this is a matter of scale. And the idea is, I think it's, one of those things that we see, Mark, that the technology is ahead of the potential infrastructure that is going to, support.
Well, it's not happening. You can't have a bipopulated world. You can't have the robos and humans, because the human isn't going to get the signal from the other robocar to swerve, and bad stuff's going to happen. And what happens when a robotaxi gets in a crash?
Right.
There's no one there to, I guess it can call for help itself, but yes. And he did say now in 50 years we'll be fully autonomous, right? We'll be George Jetson. Now there won't be flying cars, there'll be rolling cars, but he did say at 50 years. At least that's maybe possible. But even
also
that,
convenient, because you gotta love the projections, Mark, that are ahead of a person's expected lifespan. I can say, well, in 100 years, and then nobody can hold me accountable because
amen. Although I met a guy to that point. I met a guy at this event in Utah who's absolutely convinced he's going to live to 200. He's following the Brian Johnson kind of biohacking, and I guess he's in 36th place in that ranking. But the bottom line is, I find the whole thing, like they did the humanoid robot, and the videos all over the thing this morning, and okay, great. You got a robot that kind of can move its arms, and it clearly had a ChatGPT in it that was kind of talking. Okay, it was cool. It's cool. Don't get me wrong. But my problem with all of this is, have we actually really thought about, if we're going to do robotics, right? If we're going to do robots, is the human form the best form for a robot? Like, we've all seen the Boston Dynamics, or Boston, whatever they are, the little scary dog things.
Yeah, let's steer clear of those. I think if we've seen any movie, whether it's The Hunger Games, whether it's iRobot, that's so far from what a dog should be, which should be a loyal companion.
Yes.
Somebody that can provide you safety and security, not something that will allow you not to sleep for several weeks at a time.
Oh, no, but no, exactly. The only thing that would be worse if it had that opening mouth thing like in Stranger Things. Those things freak me out. But here's the thing. That form factor, right, which can run faster and jump, and is probably a better form factor if you were going to imagine the unimaginable and say, what should because for the human actions, I still think it's going to take a lot of work to get the dexterity of our fingers. I mean, sure. I don't know. I haven't seen a robot do some of the things. I mean, they can do some of the stuff, but it just seems like that's a lot of work versus that dog robot that, it doesn't need to carry a gun in its hand. It's got the gun mounted. And, I was talking with someone the other day. So I was just on my bookshelf. I have Snow Crash, right? It's amazing. Book, predicted the metaverse in 1991. It's just crazy. But Neil Stephenson wrote a second book that now I'm blanking on the name, but it's about kind of a futuristic China, just happened to be China. And there's the protagonist literally gets a gun implanted in his head. Like, and I was like, no, that could happen. And that's the kind of stuff that, I don't really want that to come, because I don't want to think that, meet someone in the street and, out pops the forehead gun and you're gone.
Yeah, let's hold that one in fiction and not make it sort of a reality, right? I think one story we probably should mention is, we had a chart of the week some time ago, I think maybe it was the summer, where we looked at some of the cases brought by the SEC and the enforcement agencies, and how they were pretty kind of off pace this year with something that we've seen, in years prior. We're kind of thinking that, okay, this could be a steady state. Could this be also, politically charged? There was one that was just released against Cumberland. So the SEC kind of intensified their regulation here, and basically they brought charges against, Cumberland out of Chicago, basically saying that they were acting as an unregistered dealer, handling over $2 billion in assets. And then the complaint names things like Solana, Cosmos, Algorand, and Filecoin as securities which they are not, but I think in the way that they have been, what they're trying to say here, Mark, is that there was not basically enough disclosure, I guess, in terms of the risk on this. So I think it's one of those things where some people are making money, some people are losing money, but Cumberland is a big player in our industry on the OTC side. And I was a little surprised to see the timing of this come down now. I don't know, Mark, if you had any reaction on some of this.
I know. Look, the timing is electioneering, right?
Mm-hmm.
I mean, we are in this, weeks away from this big election, and look, the incumbents. I hate that. I figured out how to turn that off. The incumbents. I figured out though. I think I can make fireworks, right? Yes, there we go.
Wow, look at that.
So I think I figured out how to do the fireworks.
More reasons to check out the YouTube stream, guys.
Yeah, but anyway, so the issue for me is, Gensler knows his goose is cooked if the Dems don't win. Even if the Dems do win, there's a chance his goose could be cooked if they were to suddenly shift and try to win over some of the crypto voters, which they don't seem to be doing a very good job of. But so I think he, one, wants to go out with a bang, and two, I think they believe, and it's not completely illogical. So I think there's this belief, because you saw this with Vanguard, is you got all the youngsters and the crypto natives who are like, oh, these guys don't allow me to have the ETFs. They're bad. And Vanguard's kind of like, well, we don't really care about you because you don't have any money. We care about these old people that have money with us, and they don't like crypto because it's get off my lawn kind of stuff. And so we need to keep them happy. And I think the Democrats have kind of gone that way, and they're saying, hey, we want to go after the stay off my lawn crowd. So we're going to be, hard against these upstart, crypto scammers. So I think that's part of it. Now, what I did read was the DRW, the parent company of Cumberland, just obliterated them in court. I mean, from what I understand, they just because they can afford to pay for the big guns, but they just embarrassed them. And I think that will probably backfire.
Right. And they've had success in court previously, right? I think they were attacked in 2018 and they were successful. And of course, we've seen this play out before against Coinbase and Kraken. Obviously, the famous Ripple case, which is a bit of a victory and defeat at the same time, but it allowed, kind of the conversation to keep on going. And I think what to me seems ever clear is that, these are not conventional securities instruments that were defined, 100 years ago.
The Howey test is just kind of silly, right? I mean, we're not talking about orange groves in Florida 100 years ago. Yeah. We're talking about a digital future. And, look, if you're going to say that any security, that any asset that pays interest is a security, okay, then you're going to call money market accounts and deposit securities. Okay, you haven't done that, but you'd have to. And anything that you expect an increase in value is a security. So my house is a security. So my Pokemon cards, my my son's got us, he pulled out the Magic the Gathering box yesterday. We're making a new deck and like, these are securities? Really? I got to register. I got to register my son as an RIA because he, hoards these, I shouldn't say, collects these. I'm a hoarder. He's a collector, but it's insane. But I do think the inevitability of technological innovation, which again is rewarded by, and recognized by, Nobel Prizes, it's like air. It's interesting thing about air, right? Air's all around us and it's inert, dead, right? But if we're alive and we breathe air, it's breath. So we have life. Now, all of us are going to expire at some point, and then that air, it's the same air. This is weird to me. Not weird. I mean, it's interesting to me that the same air suddenly goes from being breath to air again, like that. so there's something else going on there that I don't really understand. But the idea that forever and ever, this wave of innovation is just going to keep going and people are going to invent new things and they're going to find better ways, because 3% to Visa and MasterCard, it's a dumb number. And I'm not saying it has to be free. There's a cost to moving money around. I was at one of our portfolio companies, Strike. Jack's got this great app and you can send money anywhere in the world for free. I'm like, but free is the wrong number. I mean, right. You got to pay for the infrastructure somehow. And it's like, no, it's the growth hack, right? We got to get big first, then we monetize. Yeah, that works for monopolies, Google, et cetera, Microsoft. But if you're not a monopoly and you got competitors, you better stay alive with enough cash to continue to grow. So
sure. Well, we'll kick things over here to the chart of the week, and it's one of those that we have been talking about for some time, Mark. SUI, which is just a growing flat layer one. That's has some pretty staggering growth numbers, and I think it's something that we would love. We obviously talk about the big two a lot, but I think there's just so much growth in the overall industry that it's probably worth taking a step back and seeing what else is out there and just how it all kind of stacks up. So this will be a little bit of a different one that we take a look at today. Let me know when you can see this slide. Let me see if I can maybe keep that to a presentation view and then better go cleaner. How's that? Okay. Great. So basically, this is showing this notable rise of SUI across major exchanges, and this could potentially mean increased investor activity. It could also just be some noise as people look to kind of trade back and forth. But I think it's interesting because you kind of see how this stacks up against some of the larger players here, and the open interest on the centralized exchanges just really kind of peaking this year. And I think it's one of those things where we mentioned it a couple of times. On ETH, it used to be the go-to smart contract platform. The values kind of come back a little bit, although it's still, definitely lagging what we saw on BTC. So folks are looking for alternatives, and actually just finished a call with one of our portfolio companies, Horizon, and they're big in Web3 gaming infrastructure, and so they're supporting a lot of different protocols. Obviously, they built their own toolkit. And so it's really interesting to hear, obviously Ethereum, I don't think is going away, but there's many others like SUI that are kind of taking this lead. Mark, what do you kind of make of some of these numbers here and some of the growth that we've been seeing?
Look, innovation is going to happen. We just keep talking about it. And so, Bitcoin came out almost 16 years ago. And people said, oh, look, this is really interesting. Blockchains are a better way to capture, organize, and store data, right? Because at the end of the day, that's what this is. It's an operating system for a decentralized world. And they're like, okay, that's really good. But man, Bitcoin is slow. Okay, and there's a reason it's slow. It's super secure. So you can be fast or you can be secure. You can't be both, right? And that's we see lots of examples. Visa processes millions of transactions a second, but they get hacked. Not all the time, but often enough that I have to get a new Visa number. And so, people came along and said, Vitalik came along and said, well, I got this other idea for this smart contract platform, and then we're going to have these fees that go to the community. And okay, great. And it took off. Okay. But it wasn't super fast. It was faster, and it was, more useful in terms of you could code things into it. But then Solana came along and said, well, we can go faster and be cheaper. And, it's like, I would say it's like building a house, right? Good, fast, and cheap. Pick two. You can be good and fast, but you won't be cheap. You can be fast and cheap, but you won't be good, et cetera. And so Solana kind of had its rise, but then SUI comes along and says, well, we're even faster and even better and even cheaper. And so I asked this question, I think when you and I were talking a few months ago, that if Ethereum was invented today, and we're talking about Solana, would anybody use it, right? If you could choose between Solana and Ethereum, and Solana is faster and cheaper with roughly the same characteristics, would you use ETH? Probably not. Well, why does everyone use ETH? Well, because they were first and they have this big installed base and this big developer. But then someone pointed out that most of the developer activity is actually bug fixes. I thought that is an interesting point. So you got to look deeper rather than just the number of commits. You got to look at what the commits are for. And so long story short is I think SWI is really interesting tech. I think the question for me remains in all of these meteoric rises, whether it was Avalanche or whether it was Solana or whether it was, any of these other competing, there was, Cosmos. And so what happens is you get a lot of, excitement around the community when it gets launched and some product gets built. So in Avalanche's case, it was Crab something. It was some game. And it turns out it was like some crazy percentage. I don't know if it was 70 or 80. I mean, it was some crazy percentage of activity. And when that game fell out of favor, kind of like Axie Infinity, was great for a while and then it went down. Suddenly, it's like, well, where's all that growth? Well, that growth wasn't there. So we have to dig in a little bit here, and I haven't done it, but we need to dig in and find out, is there actual growth, or like what they accuse Solana of, it's just a couple guys in the Netherlands wash trading with each other. That's been a big, and there's some truth to that.
Sure.
I'm not accusing anybody of anything, but there is some, because the thing about, the only thing I love about on-chain is trackable.
Right.
We can analyze on-chain activity very easily. It's not like the bad old days of the traditional system where if JP Morgan was money laundering for the Ukrainian government, it's really hard to track. Well, though it's not now because they did it on chain through FTX, but that's another story for another day.
I think what takeaway for me in this kind of comparison amongst different peers, Bitcoin is still the king. They're way, way at the top. And I think Ethereum still has sort of this entrenched place where I kind of wonder sometimes, Mark, I used to think that kind of the layer zeros would be the way to go. And then obviously layer twos can kind of connect some of the forks off of ETH, which become very large chains in their own right. You could argue that Solana is kind of one of those in some ways, Avalanche as well. But I like that at least we see Sui ahead of Pepe and Doge, and I think you probably do as well, which sort of see.
And that's another good point is, what is the use, really, of meme coin activity on chain, right? Is that actually a good use? And someone the other day said, really, it's just the new casino. And casinos are a very large business globally. I mean, massive business. And that's an interesting point, right? There's an element of just speculation and gambling. There's nothing wrong with that per se. So there's lots of different elements to it. I think one of the things that is just interesting about anything that's new and anything that's starting to catch on is we get anchored in things that are traditional. And we say, well, that's what we like, or that's what we're used to. Well, yeah, we all loved riding in horse and buggies for a long time. It was better than walking. And then this other thing came along. I was like, I could get in a car. And, I got to drive it. But now we're saying, oh, no, maybe, we'll have driverless. Well, yeah, maybe. But we're always going to be resistant to change just because, we're humans. We like comfort and we don't like uncertainty. And so as these new products start to find use cases and start to find ways, there's a relentless kind of cannibalization of the advantage that they have by new technologies. And if you're really strong, you stay and succeed, right? look at what NVIDIA did with their GPUs, right? They were a little sidelight, right? They made chips for these little video cards that, teenagers use to make their games better. And the games now are amazing. I mean, the graphics are amazing. But then people say, well, wait a second. If we connect them together, they're better at parallel processing than these CPUs at serial processing. This will be better. Well, and then it went like this. Well, now there's a whole new set of computing that has to happen in 3 dimensions and vectors and arrays and matrices. And actually, NVIDIA is not very good at that. Now, maybe they'll get good at that, or maybe someone will out-innovate them. We actually think it'll be a couple of our portfolio companies. So I don't know. It's super cool and super interesting and gives us lots to talk about. But mostly it's I keep going back to this thing. So people see the robots or the robo-taxis like, oh, it's going to destroy all these jobs. Yep. There'll be jobs, mindless jobs that, people don't want. The same thing that, factory jobs went away. And then, there literally used to be a person who stood up on this giant platform at the New York Stock Exchange and wrote in chalk the price of stocks. That job went away.
Yeah.
That's okay. Because today, I was marveled at this. Today, we have more jobs than any time in human history, globally. Full stop. And the stat that I saw the other day at this event with the Filecoin, 85% of all the jobs over the next 50 years have not even been invented.
Oh, I love that stat. I love that.
I was like, what are you talking about? But think about it. 27 years ago, Amazon did not exist.
Right.
Did not exist. And today they employ almost 5 million people. That's amazing. I mean, that is amazing. And like, but we didn't need that. Yes, we did. Of course we did. And the people that make this, right, in 2007, this didn't exist. And people are like, I don't need a smartphone. My flip phone is totally fine. There's a lot of jobs making these. And the next thing, and anyway, so much to talk about, so much fun, and for another day.
I think that we should continue, as we always do on digital currency, to kind of spotlight some of these innovations, maybe the things that people know about, go a level deeper, and for the things that people don't know about, kind of to explain just, basically at the start of this year, I mean, this protocol alone has been seeing more than 500% of open interest, and really it's, now in the top 5. It's behind Bitcoin, ETH, Solana, and XRP. And it's 150% up year to date. So we're not saying that this is going to be a guarantee of future returns. We're simply saying that this is a movement that is notable because of the things that we talk about. People looking for a computing platform that's fast, reliable, that will replace what has happened in Web 2. And people are investing in that very heavily in Web 3.
You bring up such an important point that it just meant, and I don't like giving that other school down the road a lot of praise. I mean, I have huge respect for, as I call it, the University of New Jersey at Durham, Duke. But I'm a Carolina fan and I'm a Notre Dame guy. But here's the thing. 40 years ago, they weren't even in the top 50. They were a little school in the middle of North Carolina. It's a perfectly nice place. But Durham was kind of a rough town and nobody wanted to go to Duke. And they committed to the plan. This is this beautiful plan. They said, well, how do you get better? Well, you got to have better students, because the better students will attract better professors. The better professors will generate better graduates. The better graduates will build better things, and then they'll contribute back, and it's a virtuous cycle. So they went out and they recruited the best students, and that got the best professors. And then it became a self-fulfilling prophecy. But here's the crazy thing. Now they're number like 4 or 5. How do you jump Cornell? How do you jump Penn? How do you jump Vanderbilt and Notre Dame? How do you do that? By focusing on talent, by focusing on innovation, by focusing on getting, and the same thing with SWE. It's like, how do you jump, Filecoin that had a big lead? How do you jump, Cosmos or Uniswap. I mean, these are really successful projects doing really interesting things. How do you get to be from nowhere to number 5? You do something novel. You do something interesting. You do something. And that's the great part of investing, right? Is try to identify those things early and benefit from the accumulation of increasing wealth through the recognition of that innovation and the embracing of those new technologies.
Well said, Mark. There is no Michigan game this week, otherwise known as Wife Appreciation Week. So we are off. We are setting our travels next to the Middle East, and we will have a nice episode upon our return to kind of recap the sights and sounds there. We'll remind our listeners, as always, to rate, review, and subscribe. If you're not watching us on YouTube, you ought to see if we match, which today we kind of do.
Kind of. We're pretty close. Yeah, black and blue. We're black and blue.
That's right. That's right. And as always, we remind our listeners to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.